Okay, so what kind of situation do we have at the moment from an AUD JPY point of view? Now, on the weekly, what we can clearly see from a weekly perspective, we can see that the market has created this very nice impulse to the downside, followed by this nice slow retracement with a clear deceleration approaching this area. Now, if you're asking yourself, why did the market start to decelerate as soon as it reached this zone? Well, the reason for which we can see that is because this is exactly the previous support now turned resistance from a weekly perspective. In fact, we can see that here is where the market started all this move to the downside, then it broke this area down and now it went to retest exactly this zone, which is acting as resistance because, as you know, previous support in the market is turned resistance. Now, if we want to measure this retracement, what are we supposed to be doing? Taking our Fibonacci from the high to the low of the weekly impulse. And what we can see is that the last close that we have, this red one here, is below the 0.618, aka the golden ratio Fibonacci level. So we can expect, and we would like to see the next one basically as well close below this level. Now, if we go down on the daily time frame, we have a very different situation. In fact, from a daily point of view, we can see that at the moment this is a strong structure level. Okay, it was acting as support here, as resistance here. The market broke it above, went back below, tried to respect it, created a fake breakout of it, but now that the market is testing it again, is still acting as support. So until this area will break to the downside, it makes no sense to be looking for shorting opportunities, even though the market has already created this double top. So there is no basically shorting opportunity yet on AUD JPY. The market can easily just continue to the upside. Now, if we go and see what we have from a COT perspective, so what hedge funds at the moment are doing from an AUD point of view and from a JPY perspective. Let's start from AUD. Now, on the AUD, what we can see that with the last report, hedge funds have added another 2.1k short positions. So we can expect some AUD weakness because net positions are still pretty bearish at minus 35k net positions with a 45.8% short exposure and 59k shorts with respect to a 23k longs from an institutional perspective on the AUD. And from a JPY point of view, as you know, during periods of uncertainty like this one here that we're facing, money should be flowing to the JPY as a safe haven, therefore making it stronger, and AUD and JPY pairs should be making moves to the downside. So at the moment, this is still acting as strong support. We also have this trend line around this area. So it makes no sense to be looking for shorts until this area will hold. But things might change in the future, meaning that this week the market might manage to break this structure to the downside. And as you know, trading is reactive, not predictive. So if the market will just continue to the upside, at the moment we're not interested. But if the market will manage to break this zone to the downside, then all this support will be turned resistance at this area. So after the break and retest of this level, we have a very good opportunity to be looking for possible shorting opportunities inside of this area with students. And that is exactly what we will be doing. After the break and retest with students, we will be monitoring price action from a 4-hour perspective inside of this area, because always remember, monthly, weekly, and daily are for direction. The 4-hour is for entry. So we will be monitoring price action from a 4-hour perspective inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities for a nice move to the downside and test of this strong, basically a demand area that we have here from a daily point of view. Now, if you enjoyed this free analysis and education, make sure to drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.